The broadcast is now
Welcome to
starting.
the
All
Emphasis
attendees
webinar
are in
on
listen-only
variable
mode.
tests, and I'll be glad to go over the charts and take a look at things, and we'll jump right in. Let's just jump right in. Okay, got a daily, weekly stock chart up here. This is USAK, and it's a daily, weekly. Remember, we always combine the two time frames together. And this is just a classic sweet spot type of stock, and you get these sweet spots, and it might not be the exact day, but you get these sweet spots on the website now. And you just go to wintick.com. I showed them in last Tuesday's webinar. And you click on trading signals, scroll down to the bottom of wintick.com, click on trade signals, and then you can click on stocks. And you got some really nice looking charts here. As far as sweet spots, it might be helpful to you just to kind of check that out. It's for longer term trading. But I mean, look at this sweet spot here 4 days ago. It's already up 30% in 4 days. And that's the perfect sweet spot. It comes back down, price comes back down, hits the blue dot, and goes from green back to blue again. Boy, that's a textbook case right there, as is here. Prices came back down, stop at the blue dots. It's amazing how these dots are so accurate, these support points, because as you can see here, we put the dot in there 5 days before that even happened. Over here, 4 days before that even happened. The software told you it's just going to, there's strong support. Look over here, hits the dot, stops. Just so helpful. I mean, that's such a big advantage that we all have using these AbleTrend support and resistance points. That's why the scalp chart for the scalpers works so well, because the prices come back down, hit the blue dots, bounce off of them, and go back up. And the reverse happens when you have the red dots above. That's why it works so well. Nothing's perfect. I guarantee you there'll be losing trades, and there's certainly risk in trading. This is good stuff right here. This is another one I picked up off the Wintick website. Again, these are all free. There's no charge. These are right on the website, and again, you just scroll down on wintick.com. You click on trading signals. You'll see it on the bottom left side. But here's a couple new ones. That's why I brought this up. Here's a new one. I mean, if you didn't get in a couple days ago, you get another chance here today. Perfect sweet spot. Blue bar touching the blue dot underneath it. A couple times here, worked out well. I mean, popped up like 25% in a couple days. So for option traders, this is my point. For option traders, I mean, this is just ideal, those sweet spots. Of course, you want to get in even lower risk at the beginning of the trade, which is right there. You've got the weekly arrow, that's the arrows, that's the weekly buy signal. You've got the daily buy signal, the small dots, and you have a blue bar. Well, that's perfect triple confirmation. It's exactly what you want. It's obviously lower risk and better to get in at $18 than it is at $21.50. I mean, you always want to get in at the beginning of the trend when you get the first triple confirmation. First time everything agrees. Blue bar, blue small dot, and a blue arrow. Same thing for E-minis, same thing for day trading, same thing for swing trading. It's all the same. You want to get in the first time all the colors are the same. If there's any red or blue mix, and I mean that vertically, no trade. That's a classic no trade zone. You just leave it alone. You move on. Now, for the E-minis, they've been really choppy. Here's the reason, or part of the reason, besides the market being at all-time highs. Look where the VIX is today. The VIX is, my point is not working. Let me do this. The VIX is at 17 today. Anything under 20 means it's getting a little choppy. It's not going to trend so smoothly as it has been for the past year. 1 year. I'm going to go back here in a year. Look, this is an all-time low. This is 1 year back. We've never been close to, we've been in the 20s or higher. We've been 20 plus for 1 year. And 2 days this week is kind of choppy. Yes, Tuesday and today. And as you can see, it's breaking down. It's clearly broke down under this long-term trend line right there, and it broke down. So today was real choppy, and going forward could continue. What does that mean? Well, you trade the trend chart, the scalp chart. Actually, the lower the VIX, the better the scalp chart. The more choppy the market is, the better the scalp chart. Also, besides the mini NASDAQ, check out the mini Russell. It tends to trend a little bit smoother. You don't get the big moves, you don't get those home runs like you get in the NASDAQ, but you do get a little steadier chart, a little steadier price action. And you and me and nobody else in the world wins when the market's choppy. And neither one, and nobody can also control what the price action is going to be. Nobody can control that. I mean, if the price action is choppy, everyone loses. Doesn't matter what method you're using, who you are, you just can't win. I mean, of course, you can have a lucky day even in a choppy day, but it's so much more difficult for everybody. It's a trader's nightmare when the market's choppy. So not much anybody could do about that. However, with AbleTrend, 50% of the chop, and on a choppy day, you're going to get a lot of chop all day long. At least 50% of it, we're not going to be trading, meaning we're not going to be losing like everyone else in the chop. Why? Because we've got the no trade zones. Nobody else has that. That's exclusive to AbleTrend. It's our algorithm. This whole mess, choppy, ugly, impossible to win mess right in here, we didn't have a trade on. Why? Because you had red arrows above and blue dots below. That's just all the way through. When it's red and blue together, no trade. No trade zone here. No trade there. No trade. All these are all no trade zones. So it's really helpful to only trade, maybe 50% of the time instead of just getting chopped up all day long. However, it was a losing day. And it started out real good. This was really difficult to take, although the software picked it up. I mean, it's a perfect triple confirmation trade, but adding our risk principles and our risk suggestions, it's just a really, really long price bar at the beginning of the day. Very difficult to take that. I couldn't take that. Anybody, if you did, you hit a home run. I mean, that was a great AbleTrend signal. The software picked it up. But when you add, the risk suggestions of really long bars, the first, 5 minutes or so, just too difficult to pick that up. So can't count that as a winner. But the point is, even on here, losing trade right here, just put that stop, 2 points below the bottom of the blue bar. You don't get beat up so bad that way. We keep the losses to as much of a minimum as possible, even on a really choppy day. There's nothing you can do about that. I mean, same thing here. It's just, sweet spot, break even. This was okay here. Nice little trend, nothing special. This one worked out well right here. And it's a little after 2 o'clock Eastern, which is when you normally get those good trades. This one worked out well. We picked up 10 points or so on this trade. Here's your 2 greens, and there's the stop out. That would have been about a break-even trade right there. Finally, we had a good trade, 15 minutes, 20 minutes before the close. And you often get good trades at that time. That's actually a good time to trade. Last hour, first and last 2 hours usually are the best. But sometimes in the middle of the day, you get a good trade too. I'm not saying that's the only time to trade. I'm just saying you usually doesn't mean 100%. Usually means most of the time, you get a good trade. And then finally, at the end, it took off, going into the 3-day holiday weekend, with the market, of course, being closed tomorrow. So, triple 3-day weekend, and pretty good stuff. But if you want to jump over to the, you may want to. My point is, on a real choppy day, when you see the VIX like here, VIX is at 17, like it is. It just means could be a little, could be a little on the choppy side. Jump over to the Russell, and it tends to be, although it was pretty choppy today, it tends to be a little bit smoother. Okay, we had finally the end of the day, we had 2 really big winners. One extremely big winner. That toward the end of the day, and one decent sized winner right there, and then a bunch of break even, one big gigantic no trade zone, no trade zone. And the no trades is so simple because you could see there's red and blue together. Losing trade here, small winner there, losing trade there. That's a losing trade there, although a sweet spot. Then you come back with a sweet spot winner. Sweet spot winner here at 10 o'clock Eastern. And then again, a winning trade with the software, but difficult to take that trade right there because that's like a 6-point bar on the Russell. So that was a tough one to pick up. Even though the software picked it up, I can't count it because it's right after the open, and you never want to trade the first 5 or 10 minutes, of course, like I always say. Was that a sweet spot trade at the open on NQ? Yes, it was. A sweet spot is simply a pullback back to the blue dots. Let's go back to that. Let me show that to you. It went right back here, pulled back, bounced off of the blue dot and went back to blue and head on up. But it's just a really long price bars. You want to avoid those long bar entering the trade on a really long bar. You say, what's long? Well, just look at the rest of the chart. Look at all the price bars before it. If it's one of the longest ones on the chart, it's an unusually long price bar. They tend to be the worst bars to get in. I love getting in on the shorter bars because that just gives you that's lower risk, a lot lower risk. Usually when you get a really long bar, the market tends to go sideways or pull back after that. So just trying to minimize our risk as much as possible. Here's the scalp chart, which is a really, really easy chart to trade. Very simple rules. Every time the price hits a blue arrow or a blue dot, you don't have to have triple confirmation. Doesn't matter if there's red above it, we take the trade. Now, that's a little further than the 8 points from the tip of the arrow that we'd like, because we like it to be within 8 points. We don't want to take one that's really far from the arrow or the dots, and 8 points is our rule on the scalp chart on the mini NASDAQ. Why? Because the stop goes 2 points under the arrows. If we lose, we'd lose 10 points. Okay, so here's a winning trade there. Hits the blue dot, closes above it. Scalp traders just go for 5 points. Every time you hit 5 points, it's a $100 bill. Hits the red dot, closes under it. A minute later, we've got our 5 points, another $100. Hits the red dot, closes under it, but then price goes above it. We lose 3 points on that trade. Now let's make it 5. I like to stretch the losing trades. These all close either don't touch the red dot, or they close above the red dot. Actually, this one closes right, touches the red dot, closes under it, and we lost 3 points on that trade. This is a winning trade. We hit the blue dot, closes above it. A minute later, we get our 5 points. That's $100 every time we do that. Rolling right along here. I'm going along quickly. This hits the red dot and then closes above it, so that would be a losing trade. This hits the blue arrow, and that is a winning trade. Bounces off of it and goes up. Just, again, going all quickly. We've got a losing trade there. We've got a losing trade there. We've got a winner there, winner there, winner there, but it's real tight in there. I don't like when it's real tight in the middle. Winning trade there, winning. So let's. I'm going to eliminate those. Winning trade there. Okay, well, now we got on a roll. Winner, winner. So we got about 4 winners in a row. That's $400. That's a winner right there. It's $500. That'd be a losing trade right there because it hit the arrow and then it went under the blue arrow. So you get the picture. That's how we do it. That's a winner bouncing off the red arrow and going down. And that's a winner bouncing off the blue dot and going up. Michael says, was I wrong to pass on yesterday's trade? Oh, let me go back to yesterday. I passed on it because I know we stay on the sideline during the first 10 minutes. Well, we say 5 to 10 minutes. You got to use your judgment. If it's a short bar and you're close to the blue dots, get in. Let's jump back and take a look at that one. Now, just sometimes just a little trading sense, trading common sense comes in play. It's up to you. Okay, right here. Okay, here it would be yesterday. Yeah, yesterday was a really good trade at the open. Well, it's about 5 minutes in. you got to use your judgment on this one. And everybody has different risk tolerance. Some people don't mind risk at all because they know, more risk, better. Oh, okay. Sorry. Let me look at the trend chart. You were referring to the trend chart, not the scalp. Okay. Let me jump back. Okay. So again, 4 minutes in? That's just an absolutely perfect, trade right there. However, it's 4 minutes in. You got to just use a little judgment on that one. The first 5 or 10 minutes, you just have to be careful. Everybody's different. It's actually not a long bar. It's only about a 10-point bar. Plus, the blue bar is actually touching the blue dot. Boy, that's a tough one to pass up. That's a tough one to pass up. Anything under a 20-point bar, that's fair game. So you got to just use your judgment. Someone who doesn't mind a lot of risk because they know more risk equals more reward would jump all over that. But someone who's just a little more concerned with risk, you don't take it. You can't see the future. You can't. I can't. Nobody can. It turns out, yeah, you missed a mega home run. But you don't know that obviously at that time. So tough one to. You got to go with your gut on that one. That's like right on the borderline of your risk of risk tolerance. A low risk trader wouldn't take it. A one who doesn't mind a little more will, because it's only 4 minutes after the market opened. And that's that tough area where the market can be really tricky. It can be really tricky that first 5 or 10 minutes. You got to be careful. Just got to use a little, a little common sense and a little. Go with your gut on that one. That's the only time you really can. 972. 960 is a 12-point price bar. 12-point bar. So that's considered pretty small. And you have to be very quick on it. But it's tricky because it moves very, very fast, especially the Nasdaq. If you like a market that's a tad slower, like I keep saying, is to go to the Russell. Let's take a look at the Russell at the open there for Michael. Let's see what that looked like. Oh, wow. Interesting. The Russell you could not take because this is your 9:30 open, and that's a gigantic bar. So no, the Russell, there's just no way you could have caught that. Again, the software picked it up, but adding in our risk principles or our risk suggestions, long bars, right at the open, that are overly further from those small support dots, no way you could take it. Yes, sir. Thank you, Michael. Yeah, that was a tough one to take. No doubt about it. All right, well, I hope this was helpful for everyone. And I'm always glad to help. It's really important to do the one-on-one trading session, which I offer to everybody who's on a trial, because I can show you more in 15 minutes you can do on your own. And I don't want everybody to risk $126 for a 1 month trial. I don't want to lose that. I don't want to throw that away. And you're basically throwing it away without a one-on-one trading session. So you already bought it. Nothing to sell you. I'm not here to sell anybody anything. Just trying to show you the right way to use it. The software sells itself. We always give a little discount anytime before the trial finishes. You have a choice of a 1 year or a permanent license. Those are the two choices. Otherwise, it shuts off. Always glad to help in every way. Overall, it's been a pretty fantastic year since the beginning of the year. Both stocks, long-term, short-term, E-mini, day trading has been great. Always going to have losing days every once in a while. That I can assure you. That's a guarantee. But, I'm always glad to help any way that I can. So that's a good thing. Been here a long time. Watch the charts every minute of the day. Anything I can do for you, let me know. So thanks for being here, everyone, and enjoy the holiday 3-day weekend. And stay safe.